What's up guys, in this video I want to talk about some recent Bitcoin news. While retail panics and is unsure of what Bitcoin's going to do next, sovereign wealth funds, institutionals, big money continues to buy the dip. We also have the Fed meeting in just a couple of days. We're going to talk about probabilities of rate cuts and some recent job data that we got that further cements a rate cut. First off, Blackrock CEO Larry Fink reveals multiple sovereign funds incrementally buying the dip. And these government-backed investors waited for the price to fall from its all-time highs back in October around 126,000 and began adding to their positions in steady small amounts. And these sovereign funds that have been buying Bitcoin incrementally have made additional purchases down in the 80,000s. Larry Fink stressing that they plan to hold these positions for many years rather than treat them as short-term trades. And in line with what Larry Fink of BlackRock is saying, sovereign funds in Abu Dhabi and Luxembourg have recently confirmed new investments in their Bitcoin IBIT ETF. Now he does go into more detail about Bitcoin and how his stance has changed over a certain time. Definitely check out the article down below. But it makes sense that he's more and more positive about Bitcoin. Of course, BlackRock's IBIT is the largest Bitcoin ETF with $72 billion in net assets of this fund, which is quite impressive for a fund that only started midpoint in the cycle. We also had recent news that Harvard tripled their position in Bitcoin to now $443 million, accumulating 6.8 million shares of IBIT. And they have a clear strategy. Harvard accumulated between July and September while Bitcoin crashed. And we had fear levels not seen since FTX collapsed in 2022. Harvard's move shows what separates institutional strategy from retail panic. If you didn't know, Harvard's management company that manages their funds has a $57 billion endowment. It's very likely we one day see Harvard hold $1 billion worth of Bitcoin ETFs. Now this article also talks about liquidations. While retail traders are using leverage near tops, using leverage when there's hype and excitement, Harvard buys the dip. And just as retail should see it this way, institutions see Bitcoin as a multi-year or multi-decade bet. Now, how do you guys feel? Do you think institutions have it wrong or does retail have it wrong? We also have some interesting words from Kevin O'Leary saying that the December Fed cut is not going to happen. He rejected the market's high odds of a December cut, but predicted that Bitcoin will ignore this decision and remain somewhat stable, forecasting a drift within 5% of its current price. Now, some reasons that he's skeptical is because of high inflation. Annual inflation rate has recently risen to 3%, which is the highest point since January. That's a very good point. Now, that doesn't necessarily make him bullish on Bitcoin. He does say that he doesn't see a lot of upside catalysts, despite the Fed now ending QT, which tends to mark a rally. We talked about that the other day, how altcoins, when QT ends, altcoins tend to see a massive rally. I'll link that at the end screen if you guys are interested. Now, another reason why I think we're going to get a cut, despite what Kevin O'Leary thinks, is we did recently get private payrolls for November. They unexpectedly fell by 32,000. Companies cut 32,000 workers, while larger businesses with 50 or more employees saw a net gain of 90,000 workers. Businesses with fewer than 50 saw a decline. And this is the last piece of data for jobs before the Fed's decision. Almost said cut. And jumping over to the Fed watch tool, you'll see that we have an 87% chance of a rate cut, a 13% chance of leaving things current. And as we're getting closer and closer to the meeting, it seems like the odds of a cut are getting more and more likely. I mean, going a month ago, we saw like a 70% chance of a cut, 30% chance of no cut. And it is less than a day ago, a 90% chance of a cut, 10% of no cut. There's still a very high probability of a cut, which does tend to help risk on assets. Now, we did mention an important point for Bitcoin to break over in my last video. This is on the daily. You'll see that on the weekly, it's a lot more clear. This 94,000 area is very important. We basically touched it and then started cooling down. We need to reclaim 94 so that we can break back over the 50 MA on the weekly. The break of the 50 MA on the weekly tends to mark the end of the cycle. We really need to reclaim it. If we find it as resistance, I think there's pretty high odds that we are entering a crypto winter. But I personally feel like we will at least test it to get an idea. Last cycle we did test it and find it as a resistance. It did at least get a retest though after it broke down. I think we're due to at least test it, and this is at 102,000. Bitcoin needs to reclaim the 50 MA on the weekly. Cycle to cycle, it has been an important indicator to kind of give you an idea of where things go in the following months. And before I go, I did want to touch on Bitcoin balance on exchanges. In early 2024, right around when the spot ETFs went live, Bitcoin on exchange was 3 million, and now we're sitting just a hair over 2 million. We're going to break this 2 million Bitcoin on exchange very soon, in my opinion. And the fact that we were trending down, but Bitcoin was still continuing to be taken off of exchange, that kind of tells you right there that institutionals have been loading up. while retail has been panic selling. Now, if we can get a good move up, imagine how quickly this move down for Bitcoin balance on exchanges continues to accelerate. You'll notice on these moves up, once we get a good move up, you see Bitcoin on exchange drop hard. And when you get a sudden drop from Bitcoin, you tend to see a little spike in Bitcoin on exchange until we begin our next uptrend and you see it accelerate again. Imagine if this trend continues, this trend from the bottom, and we continue heading higher. I can easily see Bitcoin on exchange going under 2 million in a short amount of time. I do think technicals are very important for Bitcoin. We need to break over the 50 MA on the weekly, and that'll give us a good idea of what to expect in the future. Bitcoin finding the 50 MA on the weekly as resistance could be a good sign for future accumulation. Being able to buy during crypto winter lows, such as 2022, fantastic opportunities to add not only Bitcoin, but the Bitcoin miners. Iron was $1. CleanSpark was under $2. BTBT was 50 cents. You guys want to take advantage of the pain, of the fear. Don't buy at the highs, buy the lows. Embrace a potential crypto winter. This is what we should all be hoping for, to accumulate more Bitcoin for cheaper. If you really believe in Bitcoin, you should want the lowest prices possible, not for it to go sky high so you can get out and never come back. But anyways, how are you guys feeling about the market lately? Do you think we're going to get a cut as does the market? Or are you more on Kevin O'Leary's side, thinking that we're not going to get a cut because inflation has been ticking up? And of course, the Fed has a dual mandate, not just for the labor market, but also for inflation. But anyways, thanks as always for watching, guys. I did put out a video earlier going over CleanSpark, their Bitcoin mining update, talking a little bit more in detail with Bitcoin and the 50 MA, its death crosses. That'll be at the end screen if you're interested. Thanks as always for watching, guys, and I'll see you tomorrow.